All right, everyone. I hope everyone is present for today's third live streaming session. All right, today being the 22nd of November, today being a Friday, and today being the start of the weekend for a lot of people. Correct? Right now it's 5:34 Indian Standard Time and 4:05 Dubai Standard Time. I hope everyone has been having a fabulous day. I am pretty sure everyone is getting ready, is anticipating for the upcoming weekend to relax, to spend time with their family and friends. But we would be talking more about the Forex and the gold markets, correct? So, since the Indian stock market has been closed, we are shifting our focus from the Indian share market to the international markets. So let me start the third live streaming session for today by giving a quick introduction about myself. I am Harsh. I have 8 years of trading experience. I have been trading the Forex markets, the commodity markets such as gold, oil, silver, platinum, copper. I have been trading the US based indices such as the S&P 500, the Dow Jones 30 and the Nasdaq 100. We have been also looking at the Indian share market where we have been analyzing the blue chip indices such as Nifty and Sensex as well as identifying trading opportunities in individual Indian stocks. I am more of a technical trader where I specialize in technical analysis such as supply demand, price action, order flow analysis, swing analysis, wave analysis, and Fibonacci retracement analysis, right? I have been blessed to be trained and guided by some of the brightest minds in the financial markets. I have had the privilege and the opportunity to learn and gain experience from people who used to work as flow traders on the Chicago Mercantile Exchange. So, and I have also been successful in handling $20 million worth of portfolios and have been able to generate a return on investments of around 30 to 35% on an annual basis. With all the information that I'm providing you, I'm just trying to make you aware and I'm trying to make you comfortable and certain that whatever information is being provided by me is being provided by a person who has who has the right amount of information, education and experience, right, in the financial markets. So now that the Indian stock market is closed, we are done with providing you with hot stock recommendations and analysis in the Indian share market. Now we would be focusing on the international markets, correct? The Forex and the gold market. So as you can see today's title, what's next for the biggest what's next for Forex and gold, right? So we would be having a quick look in terms of what the markets are showing, and I would be adding my value when it comes to technical analysis, right? So let us dive into the markets to understand more. Please bear in mind that since the beginning of the week, we have been having a structured protocol when it comes to following a set procedure, correct? So we have, I'm talking about the third live streaming sessions, right, that take place after the stock market has been closed. So we have been focusing on the basics of technical analysis for Monday. When it comes to Tuesday, we have been talking about the mid-level technical analysis. Wednesday comprised of me talking more about advanced technical analysis. Thursday, yesterday we started to talk more about, all right, now what exactly is Forex and how it is able to be, how you can distinguish the Forex markets from the Indian share market. You have to be aware that the Forex markets have a lot of advantages, correct, when compared to the limitations of the Indian stock market. And we talked a lot about, the advantages such as leverage, margin, timings, and the ease of entering the markets in terms of capital. So a lot of content has been covered in the last 4 days, correct? So today, let us come and directly look at the charts of some of the forex pairs as well as the gold markets to understand how do we analyze, right? Let me start to show you as from a step-by-step procedure in terms of guiding you how to look at the markets, how to start, right? So giving you the basic guidelines in terms of how to do a typical analysis, technical analysis when it comes to the forex and gold markets. So let us start with a very prominent forex pair, which is GBP USD, right? The British pound against the US dollar. So quickly, we would be starting and having a look. We would be focusing on three time frames, right? Now, when it comes to time frames, there are so many options, right? All the way from the one tick to the 12 months. So we want to keep it very structured and to the point. So we're going to be focusing on the daily, then we'll be focusing on the 4 hour, and then the 1 hour, right? We do not want to have too much of time frame analysis, multiple time frame analysis, because it will confuse you even further. So we want to be clear and precise when it comes to following a certain layout when we're talking about technical analysis. All right, so we can see Sophia in the chat house. Sophia, hello, how are you? I hope you're having a great day, and I'm pretty sure you are all set up, all sorted for the weekend, which is going to be starting after a couple of hours. So I hope you will have a great weekend. All right. Anyway, so coming back to the forex pairs, as I was mentioning, let us quickly understand how we will analyze the markets, right? So given the chart, given the current forex pair that we are looking at, let me plot the pivot points, right? So how will we plot the pivot points? We would be plotting the pivot points based on, either you can use a polyline or you can use any charting tool of your preference. So just based on the overall market movements, right, in terms of swings, we would be marking it by the help of a polyline, right? I preferably use a polyline. If you are a person who wants to use some other tool, you can do so, right? So we have been having this particular structure, or let me do a thing. Let me draw it again with the color denotations as well. So currently at this particular phase of time, the markets were having a clear bullish sentiment, right? And after that, the markets came and started to turn bearish. So the prices have been correcting quite heavily for this particular pair. And let us understand by let us identify certain key points, right? Key points are those points where prices have been reacting quite a lot, right, and are prominent in terms of holding, and if they are broken, they signify that prices are going to continue in a particular direction even further. So let me quickly start from the top. We have an area called as a key zone. Right now, what this area suggests is that the prices have structure, right? Technical analysis is all based upon structure, right? If there are certain formations or candle structures that have taken a place in the past, we expect them to repeat again in the future. That is the crux of technical analysis. So let me just start marking with key important areas. One second. Certain key areas where we might start to face some kind of where some kind of bias may be starting to generate in terms of what prices might do. So I'm marking, these are called as key levels, right? Some people might call it as support resistance levels. The terminology for a key level is simple. Any place on the price chart which has some kind of significance is called as a key level. So we have been marking certain key levels such as the ones mentioned on the chart. All right. So as you can see, the prices have been continuing lower. As and how the prices have been continuing lower, the prices have been coming into certain areas of interest as well, right? So let me start to change the color, because understand the color red denotes bearish sentiment and the color green indicates bullish sentiment, right? So we want to keep it simple. We want to keep it less complicated. So these are certain points that are on your screen. So this is just to get a clear gist in terms of what the prices are currently showing for this particular pair. Key levels are those levels, prominent areas where prices have potential to react to, correct? If for reason there is a particular key level like the one mentioned over here, if it gets taken out, that indicates it will go to the next key level. Sorry. And if that gets taken out, it will indicate that the prices will have even further bearish sentiment to the next lower key level, right? Around the 1.2330 area. Now that we have got a clear understanding in terms of the swing and in terms of the key level. So what is the swing? Let me just type it out. So swing is currently bearish. All right. So point number one, very important. The swing is bearish, and most importantly, the price is currently sitting at T levels, right? Now either it is a level or levels, it depends on the pair, but these are the current two scenarios that are taking place on the daily time frame, right? We still have two more time frames to go through. So based on this two, we have the swing, which is bearish, and the price, which is currently at a key level. Note that there are key levels below that as well. We want to get a good analysis from all perspectives, right? From all angles possible. So based on that, for those of you who are still having a little confusion when it comes to Harsh, is there any other possible indicator that we can use to get a clearer understanding of swing? You can always use the moving average, right? Because moving averages can get quite a lot of work done when it comes to understanding the bias in terms of what is the sentiment in the direction, correct? Whether it is bullish or bearish. So let me make it a little darker so that people can see the screen. Perfect. So when it comes to the moving average, you can clearly see that the prices are well away from the moving average. I have always informed you in the previous sessions that whenever prices are away from the moving average, right? When the distance between the moving average is significant, right? The prices are away from the moving average. There is a general consensus for prices to return back to the moving average. The moment the prices are away from the moving average, the prices will return to the moving average. So I hope you are able to understand and analyze. We are trying to connect as many dots as possible, right? So right now you can see the moving average is the current price is away from the moving average. Whenever there is a huge gap between current price and moving average, there is a tendency for prices to return to the moving average. Why? Because moving average is the average price of the last X number of candles, and X stands for the parameter, right? In terms of what parameter you have given. I have given the parameter of 20 for the last 20 candles. What has been the average price? The overall purpose of a moving average is to be as close as possible to price, because that is what the moving average the purpose of the moving average is for, correct? Since the moving averages, the distance between the moving average and the current price is significant, we do expect that prices should at least return back to the moving average. So we are starting to get some kind of bias in terms of, all right, the trend is bearish and the price is currently at a key level, and we expect prices to continue to reverse. We expect, we are not telling we will, right? Because we're still on the daily time frame. We have to go to the lower time frames as well. Now that the daily is covered, let me minimize the watch list. Let us go to the 4 hour, right? Now in terms of the 4 hour, you can clearly see that prices are, now that we are coming to the lower time frames, we do not need to focus much on the swing or the outer structure. We want to focus more on the zoomed structure, as in we need to magnify and focus at the current price action. So based on the current price action, let me mark certain levels which are again of key importance. We have certain areas, and let me denote it with another color of red, right? So we do not get confused. Wait, let me put it as another shade of a darker shade of red, right? So 1 second. All right, I think we are good. So the 4 hour has a darker shade of key levels as well. So we have on the 4 hour a level at 1.2850, and we have a level at 1.2600, right, approximately. So currently we marked the key levels on the daily time frames, and we understood the trend in terms of whether it is bullish or bearish. It turned out to be bearish, and we marked the key levels. Now we come to the 4 hour, and we do the same process and repeat it again on that particular time frame. So as you can see, there was a key area of support before where prices were holding, correct? Now that that area has been taken out, it becomes a key area of interest. Why it is a key area of interest? Because now the prices are holding and have broken. So next time when prices are able to rebound or retrace to the key area of interest around the 1.2600 price area, we expect some kind of movement, whether the prices might hold it. And let me show to you with arrows whether the prices might return back to the key level and continue with the trend, or there might be a possibility where prices might be able to break above, retest the key level and continue up. I hope I'm able to connect the dots, right? It is very important for me to make sure that we are following a structure, right? We do not want to take random decisions based on random analysis, right? We want to keep our analysis as structured as possible and as descriptive as possible, correct? So as you can see, we are currently sitting at 1.2500 level, which is an important key level. And that is not just enough. We have to see some kind of confirmation that prices are preferably going to hold and continue up. Let us go to the 1 hour and see in terms of what is there any other structure or clarity that the 1 hour can have. Let us go to let us put an indicator which would be the moving average, convergence and diversion. Now based on the moving average, convergence and divergence, this particular indicator gives us a very clear description, or sorry, a very clear outlook in terms of what is the sentiment and how intense is the sentiment, correct? So as you can see, I have always mentioned when prices are below the histogram, that indicates sorry, when the moving averages are below the histogram, that indicates bearish sentiment. And when prices are above, when the moving averages are above the histogram, that indicates bullish sentiment, right? With green being bullish, red being bearish, and whichever phase the moving averages are, whether in the bearish phase or in the bullish phase, that determines this trend. So as you can see right now, the histogram is enlarging, correct? It's red and it's enlarging. Moreover, the moving averages have been quite heavily in the bearish phase, right? So we are still not getting any clarity when it comes to whether we are expecting a reversal. We need the moving averages of the MACD to return to the positive or to the green phase of the histogram, with the color shifting from red to green, and then we can start to be more certain that at least we would be expecting a movement from here to here, right? Because price moves generally from one key point to the opposite key point, so we would be expecting prices to continue in that particular direction. Let me go back to the 4 hour to have a quick look. Now, based on the 4 hour, as you can see, even in terms of the 4 hour, the histogram is still showcasing bearish sentiment, right? MACD is bearish, the trend is bearish, and the key levels are currently holding. But since we have two factors which are showing bearishness and one factor, the key level, that is showcasing possible, possibility of a correction. We need more confirmation, right? So how we will get more confirmation? We will get more confirmation by either going to a lower time frame such as 1 hour. We were already talking about the 1 hour. Now based on the 1 hour, we need to see, okay, let me delete these parts, so that we can focus more on the structure that I'll be talking on the 1 hour. Currently prices are over here. We need to see the sentiment shift from being bearish to being bullish, right? Now it is very important to understand this concept. When prices are continuing in a downward trend, or when prices are having a bearish sentiment, you all are aware that the prices are creating pivots called as lower lows and lower highs, correct? I'm pretty sure every one of you are aware of this particular concept, right? In a downtrend, it is the lower lows and the lower highs that are conducting the movement of price, correct? As you can see, now that the prices are having a sentiment being of, bearishness, we want to see that the sentiment or the trend, or there has to be a shift in the sentiment from bearishness to bullishness. How can that be possible? We need to see that visually. Remember, when it comes to technical analysis, we are looking at trade opportunities based on swings and based on visual confirmations, correct? So currently the prices are sitting at the lower low area, so there is a clear depiction of trend being bearish on the daily, being bearish on the 4 hour, and being bearish on the 1 hour. We need a swing that has to be taken, right? Let me make the line a little thicker. There has to come a point in time in the future when it might create another lower high. One second. Where it might create another lower high, maybe a lower low, but we need the formation of a fresh higher high. We call it as fresh because it has to create in real time in the future. Remember, we are at the 1 hour, so we are not looking at the daily where we have to wait for one entire day to for the candle to close. We are looking at it on the 1 hour, and based on the 1 hour, if we are getting a formation that showcases a lower low, a lower high, maybe a low or an equal low, or maybe a higher low, but most importantly, it is, the most important aspect has to be the formation of the higher high, right? If the higher high gets formed, that indicates now that the bearish sentiment that was in play has been shifted from bearishness to bullishness. And that is when, once we get the confirmation that a higher high is created, once it creates, correct, we would want for prices to, we want to go long on the retracement or on the correction. So this is the plan of action for this particular trade. So I hope people are able to connect the dots, and I hope people are able to understand. We have a structured layout when it comes to the analysis of, forex and gold market. So for a pair such as pound dollar, the daily, the 4 hour, and the 1 hour are all showcasing bearishness, right? Bearish sentiment. But since based on the daily, we had an important key support area, right? One second. We have this key support area. The reason I'm writing it is because if I don't want to go to the higher time frames, because it will, the drawings will get, merged and will spoil the entire outlook. Since it is coming to a key important area right now, it is sitting in the key important area. We want to make sure that we get confirmation. And how can we get confirmation? We can get confirmation when a fresh higher high is formed. The moment a fresh higher high is formed, the sentiment that was previously bearish will now be shifted to bullish. And once it gets formed, once we get a confirmation that prices are creating, are having bullish sentiment, the moment prices start to retrace, we will look for a long opportunity. Where will we look for a long opportunity? All the way back to the previous key support area, right? So the key support area for this particular pair is at 1.26, around the 1.26 area, correct? So this is how we look. So we enter and we make money by prices going. If the scenario works out the way it is, we will be seeing that prices would be making good amount of profitability. Now please do not get confused when we are talking in terms of stock. In the stock market we are looking for an average profitability of 5%, right? But when you're looking at forex, the numbers change, the denominations change. So what used to be a 5% move in the Indian share market stocks, the same movement can be based on zero point 0.5, right? I mean, we would have to work out the calculations, but what I'm trying to say is we cannot be expecting a 5% correction on forex, because the 5% correction has huge significance, right? So I hope people are able to understand how we are able to analyze the stock market, the forex pairs, how we follow a structured plan of action, right? So let me just delete all the drawings for this particular time frame. Not all the drawings, but for this particular time frame. Give me a minute. So okay, I'm deleting all the lines. All right, for this particular time frame. So this is what we have in play, and this is what we expect for the 1 hour. So let me again just reiterate the points which we are looking at the daily and the 4 hour. Let me get back to the daily. So on the daily, as I had mentioned, we are looking for the swing, the current swing, and the current sentiment based on swing and trends, and the key levels, right? Key levels are important because those are the areas that signify potential for prices to either reverse or to break. Let me show you another previous example when it comes to key support areas. This was a key support area which acted as a resistance. The moment prices had broken above it, so this was the area of resistance. The moment price broke above the resistance, so the resistance had been taken out, right? And now it became a support. Such zones are called as key levels or flipped zones, right? And you can clearly see next time when prices had, came back to that area of interest, the prices held and prices were able to continue up. This is the importance of key levels or flip zones, right? Now that prices have returned back down, they have come again to areas of interest where prices are currently still continuing down. Based on the current price, which is sitting at 1.2503 area, we still see that there is a key important key level. So most importantly, there are two major aspects. One is the swing and one is the key levels, right? Once the daily is covered, you can even see on the MACD on the daily time frame that the histogram is bearish. The moving averages are below the are in the bearish territory of the histogram. So completely it is having a bearish sentiment, right? On the daily. On the 4 hour, we repeat the same process, which would be which would be analyzing the trend and marking the key levels. Right. Once the trend and the key levels are marked, we try to analyze the recent most structure when it comes to swings. And even based on the recent structure on the 4 hour, we can see that the prices are bearish. Correct, with the histogram being red and the moving averages being in the bearish territory of the histogram. Now that we have covered on the 4 hour, on the daily and the 4 hour, let's go to the 1 hour. On the 1 hour, we did the same, we followed the same procedure where we are trying to analyze the swing. Now, based on the 1 hour, you can see that, please understand, the lower the time frames you go, the more fluctuations, right? Or the more movement. But still, nonetheless, you can clearly see prices are still continuing bearish, right? So there is still bearish sentiment on the 1 hour. And in terms of the key levels are the same, right? That we had observed on the 4 hour and the daily. So prices are currently in that level. Since the prices are bearish, the swing is bearish. The histogram, the MACD is showcasing bearish sentiment on the daily, on the 4 hour, and on the 1 hour. we are less probable correct in terms of taking a long trade. But how do we know that we can look for a long? Because now the prices have fallen quite drastically, so we want to go and make money. How can you make money when you are taking trades based on clear structure? How can we get a clear structure? Since we are aware that prices have been falling down, we need the formation of a pivot, and we need the formation of the first higher high. The most important aspect for confirmation is always based on the formation of the first counter swing. We call it as counter swing. Since the prices for this particular pair were bearish, the higher high is the first signs of having counter pressure or sentiment shifting from bearishness to bullishness. Once the structure is fulfilled, that is the time when, once again, that is the time when we will be looking for structures to enter. And based on these structures is where we would be placing trades and looking to make money, right? Money in terms of profits. So I hope people are able to understand the outline of how we analyze the markets and how we follow certain guidelines, right, to help us in understanding the bias in terms of whether it is bullish, bearish, or sideways. Let us look at gold for now, right? So let me get back to gold. Yesterday was a very interesting, detailed session when we were talking about the advantages of having of trading forex compared to the limitations of the Indian share market, right? So we had so many advantages or positive points which we were focusing on, and it's very important to understand that since the Indian share market has been correcting, let me just quickly showcase you what I'm talking about. Based on the Nifty, yes, currently the Nifty is being held again at a key level, correct? Since prices are being held, there is some kind of optimism. Today being Friday was one of the best days when it in terms of bullish sentiment, in terms of optimism. There has been almost a correction of almost 2.5%, right? So with such strong corrections, you have to understand that technicalities are, we do look at fundamental analysis, but it is the technical analysis that creates the difference in terms of front running, in terms of speculating what could be the changes in direction. And we were spot on when it came to certain structures like this, right? We were already looking at the area at the 23,000 structure. Though we do not trade the Nifty, but we analyze the Nifty, right? And based on that, we were expecting the prices to continue, and that is what exactly is happening. So coming from the Indian share market, which is basically having a correction of almost 11.5%, right? 11.5% since the last week of September. The prices have been bearish, bearish, bearish. Lot of pessimism, lot of uncertainty, lot of uncertainty as well as skepticism when it comes to what the markets are going to do. How is the economy going to recover with all the factors of circulating geopolitical uncertainties, as well as the FIIs. The more the Since the month of October, they have been pulling out their funds from the Indian economy and have been investing it into other economies of other countries, which are providing them with better return on investment. So there has been a lot of uncertainty. There has been a lot of skepticism, correct, when it comes to the Indian stock market, and that is the reason we should always be able to diversify our trading as well. We should be looking to trade in the forex, in the Indian share market. But now, since the conditions of the Indian share market are not feasible, right? There has been a strong, reversal in terms of strong correction, right? 11.5% correction over a span of 1 month, right? All the way from October. That signifies that you should always have additional instruments that you can trade. And Forex, the international markets, correct? The Forex and gold markets are key markets that you should be always having your trading accounts in, so that you can make money in those. We have been proving ourselves day and day, week after week, month after month, in terms of our profitability. Even though the Indian economy has been correcting since October, has corrected by more than 11.5%, we have been able to achieve a profitability of 152%, correct? That just showcases the power that we are able to provide to you, right? The power to make money. But since there are a lot of people who are like skeptic, they're telling me that, Harsh, we love the content that you are providing. We understand that you have been providing us with such great trading recommendations, hot stock recommendations, but they still are uncertain when it comes to the markets. Why? Because when they see a correction on Nifty, and Nifty being the, the main index that people look to understand the health of the Indian economy, all they see is bearishness, all they see is weakness, and that is not a good sign. So to all those people who are still skeptical in terms of following our trade recommendations, we would highly suggest you and recommend you to come to the Forex and gold markets, because the key to entry in those markets is much cheaper, right? You need less capital, less funds when it comes to opening accounts, and you have more advantages, correct? You have better leverage, you have better trading timings. You can trade for 24 hours a day for 5 days a week, correct? So you have all these points in your favor, and that is why it is very crucial to have an account in the Forex and gold markets as well. Let's go it back to the forex and gold markets. We talked about a prominent pair in the forex market, which was GBP dollar, right? The pound, the British pound against the American dollar. Now let us quickly have a look in terms of what the gold is showing, right? So now we will be talking about gold. Again, we would be following the same structure when it comes to what exactly we are trying to look, right? When it comes to technical analysis. So let me quickly start by marking all the required levels, right? We have a level over here, a key level. We have a key level over here. We have another key level over here. Now this level has been taken out. We have another key level over here. So these are certain key levels. Let me write it again. So the ones in red, right? The red key levels indicate bearish pressure, and the ones in green indicate bullish pressure in terms of higher probability for trades to react from certain from these key levels, right? Now, as you can see, we had a key level which was marked based on this. It was looking like it would be creating a shoulder, a head, and a shoulder pattern, but the prices have taken out the key support area. Now that the key level at 2680, right, approximately 2680 for gold, that key level has been taken out. We could be seeing the prices to continue much higher. So this is how we start to understand. First and foremost, what had I explained to you? First of all, we have to analyze the trend, right? And second, we need to identify key levels, right? Whether you want to call it a support, resistance, or flip levels, you can call anything, but the meaning remains the same. So we have to analyze trend and we have to identify key level. In terms of trend, what can you see? The prices had been creating higher highs and higher lows. Now that the price has created the first lower low, we are coming into a sentiment of neutrality, right? Why neutrality? Because now the prices which were bullish have started to show sideways movement. So now that the prices are showcasing sideways movement, the trend is sideways, all right? So from bullish, the prices are currently having a sideways momentum, right? So in terms of trend, let me write it down again. It is sideways, all right? And in terms of key levels, we had this particular key level which was at 2680, and that key level has been taken out. Now that the key level has been taken out, there is high potential for prices to either react to the key level and continue up to the upper key level. So trend is sideways, and we have seen that the key levels have been taken out and would be continuing to the next upper key level around the 2780 level, right? Remember, trading is about probabilities, correct? Trading is not about certainties. In terms of the moving average conversions, diversions, we can see the first green color histogram bar, but the moving averages are still in the bearish territory. So we still do not have confirmation on the daily. Let's get to the 4 hour. In terms of the 4 hour, we had an important key level over here, which was a support that had been taken out as resistance and has again been taken out. So a strong key support area. Now, in terms of 4 hours, let me mark the new additions to this particular time frame. We have a key structure over here, and we have a key structure over here. Now, please understand, based on the annotations, the color denotes the sentiment, what can happen around that particular key level. Now that prices are in a very important, are at a very important key level, resistance level basically of 2700, we have to analyze and see what prices can do in this particular area, right? If prices are able to break, they will go to the next key level area, which is here. If prices are able to break that also, then the prices can continue all the way to the uppermost key level area, which is at 2780. All right, now in terms of the histogram, based on the moving average conversions, diversions, it is quite, the histogram is green in color, and the moving averages are well within the positive territory, right? So we can see that in terms of the sentiment based on the histogram, the trend is bullish, right? The trend is bullish. Now let's get to the 1 hour. Now coming to the 1 hour, we can see that again, as I had mentioned on the 4 hour, an important area key level is where currently prices are sitting. The histogram of the MACD is green, and moving averages are well inside the positive territory of the moving average conversions, diversions, correct? So that is still indicating that prices could be having continuation of a bullish, could be having a bullish continuation. Now that we are aware that prices have been continuing up, we should be looking for a confirmation in terms to take a short, because we are generally looking, since prices are getting expensive, we want the prices to correct. Now, how will we expect prices to correct? First and foremost, we have to identify the swing or the trend on this particular time frame. So let me mark, we had a swing which looked something like this. The prices kept correcting, and now the prices are going up. Currently, based on the market structure, the last swing low is this, right? Let me change the color to black, and let me make it a little dark. So oh, the last swing, as you can see, is based between the points as mentioned, right? The black lines. We need to see the prices to either create an additional swing and creating the first lower low. So for the case of GBP dollar, we had, we waited patiently for, we are waiting patiently for the formation of the first counter trend structure, right? And that was a higher high for GBP dollar. But for gold, we have to start looking for the first counter trend structure, which would be the onset of the first lower low whenever it gets created. Once the lower low is being created, let the prices retrace back, and we will ride the wave, right? We will take the ride all the way to the next important green color zone, because that is where prices might react and continue up. So I hope everyone is able to understand in terms of the histogram of the moving average of the MACD. The histogram is bullish, it is green in color, and the moving averages are well into the positive territory of the MA. This is how analysis is done, right? I'm pretty sure everyone has learned a lot of information based on the content that has been provided based on the last couple of days that we have been talking about. We were focusing more on the theory aspect, more on showcasing our trade potentials in the England stock market. But now, since the markets have been closed for the week, we have been talking more about the forex markets, right? The forex markets still have around 6 to 7 hours more of trading time before they close for the week as well. Remember, the stock market is open for 6 hours, the forex market is open for 24 hours. But both the England stock market and the forex markets, the international markets are open only for 5 days a week. Saturdays and Sundays, the markets are closed. So we are trying to showcase you the power that is in the international markets, in the forex and gold markets. In terms of the forex markets, we looked at a prominent pair such as pound dollar, and we had a top to down approach, top to bottom approach in terms of how to carry out the analysis. When we looked at the gold markets, we had followed a similar pattern where we had again a top to bottom approach in terms of what is the daily time frame showing, what is the 4 hour time frame showing, what is the 1 hour time frame showing, what is the swing, what are the key levels, right? Key levels are basically pivot points or certain places on the chart which might have, a reaction, which might showcase some kind of reaction. It could be a reversal, it could be a continuation, correct? So I hope everyone has had a good amount of understanding. I have been very meticulous and I have been very structured when it comes to providing you with an outline in terms of what technical analysis is all about, right? During the live streaming sessions, you will have a very clear understanding in terms of what we provide in terms of information, especially in terms of content, right? So we provide you with analysis, we provide you with hot stock recommendations when the Indian share market is up and running, and when the Indian market is closed, we provide you with education. This is the education that I'm talking about. Education in terms of understanding how the markets function, right? Remember, we are providing you with earning opportunities, but we want you to learn as well. If you can combine earning with learning, you can have the best combo, and that can, significantly improve your knowledge in the financial markets and can also make you rich, correct? By booking profits after profits after profits. Any questions that you might be having, do let me know in the chat box. Remember, our live streaming sessions are based more on an interaction. Yes, Harsh will do most of the talking, but I need to be aware that people are able to understand, people are getting a clear understanding of what I'm trying to convey, right? So you can always write down in the chat box that Harsh, you are doing great. Harsh, we love the way you talk. Harsh, we love the analysis that you do. And please be sure to become a part of Dolphin Markets, right? Jump onto the bandwagon of Dolphin Markets. Become a part of Harsh's live streaming sessions, because that is the place where you will be learning and making money. You will be learning and earning at the same time, right? And I always like to keep my live streaming sessions in a very jolly, in a very energetic manner, so that people get entertained, people learn, and people can earn at the same time, right? I hope everyone will be having a great plan for the upcoming weekend. I'm pretty sure I'm booked for a lot of events for the weekend. This is the time when you get to relax. This is the time when you get to spend time with your family, your friends, your loved ones, your girlfriends, your boyfriends, your children, your grandchildren. So take this opportunity to understand and, let it settle into your brains, because being a part of Dolphin Markets, being a part of Harsha's live streaming sessions is of vital importance, because we understand that we are not just here to provide you with services, right? There are thousands of brokers across the globe that are providing you with brokerage services, right? We are adding value. We are not just providing you with brokerage services, we are providing you with these live streaming sessions which have so much of valuable information that is imparted to our beautiful community members on a daily basis. So why would you not want to be a part of such a high content based live streaming session? So always be sure to keep your attendance to the fullest. Keep attending all the live streaming sessions. Make sure that you take out time for my sessions, especially the first two sessions, because that is when the stock market is up and running, and we want to provide you with as many hot stock recommendations as possible. Yes, for those people who have been asking that, Harsh, are you going to be sharing trade ideas in the Forex and gold markets? Yes, we will be sharing ideas, but not now, in the near future, right? But when that happens, you will be the first ones to know. So I hope everyone has had a good understanding. Let me give you a quick summary when it comes to what we had discussed today. We had dived directly into technical analysis, right? Technical analysis on real time markets, right? So we looked at GBP dollar and we looked at gold. I wanted to make sure that I could cover two pairs, which was one based on a forex pair and the other based on the commodity pairs, right? Gold. We looked at how a structured bias when it comes to understanding what to start, what to look for, what to be aware of, and how to follow. I have explained you all the steps. I've made it as meticulous, as detailed as possible, but at the same time, I've kept it as basic as possible as well, so that people understand that yes, what Harsh is talking is very valuable, is very high content based, right? And we covered up in detail in terms of what we are looking for and what could be the possible mode of action for these two particular financial pairs, right? The pound dollar and the gold. So I hope everyone has had a great time learning, and do make sure to return back to the live streaming sessions on Monday, where I would be again looking at the Indian share market, because the markets would be up and running. We would be looking at all the advancements that would have taken place after the weekend has closed, right? Because during the weekend, and especially with the news events that are currently taking place, with Mr. Gautam Adani having, being accused of severe allegations based on bribery and on fraud on the US soil. So there has been a lot of backlash to the Adani group of companies. So will that have an effect on the stock market? We will keep you updated, right? So I hope everyone has a great time, has a great weekend. Make sure to spend your valuable time with your friends, families, friends, your spouses, your children, and your grandchildren. And I will be seeing you back on Monday. So until then, have a great weekend. This is Harsh signing off. Namaste and take care. Bye bye.